problem? So we are preparing, this is Taylor's Limited. So in the books of Taylor's Limited, in the books of, or you can just say Taylor's Limited, in the books of Taylor's Limited, departmental trading and profit and loss account for the year ended 31st December 2007. Okay, we just have actually we just have two departments, A and B. We just have two departments, A and B. So general profit and loss account for the year ended 31st December 2007 and balance sheet as on 31st December 2007. Okay, now we can do one thing. We can now, all this time what I was doing is I was preparing the trading account first, and then I was going to the departmental profit and loss account, and then we were doing the general profit and loss account. There's another way of doing it. You all see which you all are comfortable with. You can keep transferring the items as in how they come to the respective accounts or to the respective statements. For example, share capital is the first thing. Now we know share capital goes in the balance sheet, so I can write it now itself. Okay, so it's up to you. You can either prepare it simultaneously or you can prepare it statement by statement. Okay, so now in this problem I will do it simultaneously. It's up to you how you want to do it. So share capital is 1 lakh, so I'll take it directly to the balance sheet. Share capital is 1 lakh. Now to share capital, I know that there's net profit that needs to be adjusted, so I'm not going to write anything. I'm not going to write it in the external column. I'm just going to write it in the internal column or in the here, so that I can adjust the net profit. Okay, this final net profit will have to be added here, or net loss, whatever it is, whatever we get. So share capital is taken. Then we have the opening stock of A and B, 40,000 and 2,500. So 2 opening stock, 40,000 and 2,500. Then we have purchases, 5,50,000 and 5,000. 2 purchases, 5,50,000 and 5,000. Then we have sales on the other side, 6,25,000 and 75,000. Buy sales, buy sales, 6,25,000 and 75,000. 6,25,000 and 75,000. Then we have the transfer of goods to department B. So one is transferring, one is receiving. So basically B is receiving and A is selling. So I will say to departmental transfer, and this side it will be by interdepartmental transfer, by interdepartmental transfer. So here now who's transferring to whom? We have seen that transfer of goods to B department. So A is transferring to B. So for A it is like sales, 25,000, and for B it is like purchases. For B it is like purchases. Okay, I told you that selling price makes no difference here. Here we record the transfer as it is, as the amount is given to us. Then we have directors' fees and remuneration. Now this we have already decided has to go in the general profit and loss account. So I'm going to directly put it there. To directors' fees, the amount is 15,000. It can't be divided. That's why I'm taking it to the general profit and loss account. Wages of A and B are given to us 10,000 and 20,000. To wages and salaries. To wages and salaries 10,000 and 20,000. I told you, I think in the last problem, if it's salaries and wages, it goes to the profit and loss account. If it's wages and salaries, it's taken in the trading account. Then we have rent and rates 342A. Okay, so 342A, that means 142B. So the ratio is basically 342A, 142B. So 3 is to 1. So rent and rates will come in the profit and loss. So I will just leave, I think there's nothing else going in the trading account. So I'll just leave 2 lines here. Then I'll start with the profit and loss. 2 rent and rates 3 is to 1. To rent and rates 3 is to 1. So if the total amount is 4,000, 3/4 of 4,000 will be 3,000 and 1/4 will be 1,000. So 3,000 and 1,000. Then we have lighting again. Now 3/4 to B. So it will be 1 is to 3. Okay, 3/4 to B, that is 1,000. Total is 1,000. To lighting. To lighting 1. It's going to be 1,000 divided by in the ratio of 1 is to 3 because it's 3/4 to B. So here it will be, I think it's 250 and 750. 250 plus 750 comes to 1,000. Similarly here, 3,000 plus 1,000 comes to 4,000. Then we have depreciation. B is given first, so be careful. B is 2,500, A is 500. To depreciation. A is 500 and B is 2,500. Just be careful. Okay, it's not given as A and B first. Then we have office expenses. Now this cannot be divided, so I take it in the general profit and loss account. Office expenses is 1,500. To office expenses 1,500. Then we have furniture and fittings. That is 10,000. Furniture and fittings is 10,000. Furniture and fittings is 10,000. Then we have, now some of you may ask me on what is this depreciation. We have furniture, we have equipment. Okay. Now basically this depreciation doesn't have to be minus from each of these because this depreciation is given here. Okay, when the depreciation is given in the adjustments, then it will come twice, and then they'll also tell you on what the depreciation is. So right now, the fact that the depreciation is given here, we have to just take it once in the profit and loss account because these balances, furniture and fittings, where is that? Equipment are given after depreciation. It's already given after depreciation. Only when depreciation is given in the adjustments, that's when it's not shown at all. That's when you need to take it, show two effects. Okay, so depreciation will come only once. Furniture and fittings, then we have office salaries is 8,000. Office salaries 8,000. Then we have equipment, which is 25,000. Equipment goes in the balance sheet. Equipment 25,000. Then there is carriage inverts only of A. Okay, so okay, I missed that and I have another row here. 2 carriage inverts only for A, and the amount is the carriage inverts is 33,000. This carriage inverts is only for A, so the entire amount goes to A. Then we have investment, which is again an asset which comes in the balance sheet, 50,000. And then we have income from investment, which is 5,000. So that will come in the general profit and loss account. Leave a line for the net profit and write this. By income from investment, which is 5,000. The last one is cash at bank, 27,000. Cash at bank, 27,000. 27,000. Okay. That's it. We have posted everything in this table. We'll now check the adjustments. In the adjustments, we just have closing stock. Closing stock of A on hand was 48,000 and that in B amounted to rupees 3750. So closing stock now, since it's in the adjustments, it will come twice. So we're going to say buy closing stock, that is 48,000 and 3750. Okay. There'll be another effect to this in the balance sheet. Closing stock. Now there's going to be an adjustment here. Closing stock of A, it is 48,000, and of B it is 3750. Now I'm not adding this because there's going to be some adjustment. If you remember when we had discussed that stock reserve also has to be minus from closing stock in the balance sheet. Okay, in the previous problem I discussed it. Why I didn't minus it in the previous problem? Because we didn't do the balance sheet in the previous problem. Okay, so now let's go to total this. I will total this first. So if I take this total, the total here comes to 6,98,000, and this side it is here credit is heavier than the debit, 78,750. 6,98,000, 78,750. To gross profit. To gross profit, the amount here for this department, for A it is 65,000 and for B it is 26,250. Bring down the gross profit accordingly. So to gross profit carry down, and then I say by gross profit brought down. So 65,000 and 26,250. Okay. Now I go to calculate the net profit. So the total again, if you see, the credit is heavier than the debit. So 65,000 again, 26,250. 65,000, 26,250. So to net profit of each of the departments is to net profit carry down, I'll call it. For A it is 61,250 and for B it is 22,000. 22,000. Yeah, 22,000. Okay. Bring down the net profit. By net profit brought down to the general profit and loss account of A 61,250 and of B you can write it outside also. We'll write it outside directly. 61,250 and of B it is 22,000. Okay. Now before we go to finalize the general profit and loss account and find out the overall net profit, what we need to calculate is that stock reserve. Why does the stock reserve come into the picture? Because the interdepartmental transfers are made at selling price. Okay, so let's go back to the problem. They've said the latter department gets all the requirements from the A department at the usual selling price. That means A transfers to B at the usual selling price, that is cost plus profit. So we need to find out in the closing, and then they told us in the closing stock. Okay, this closing stock has entirely come from A. That means this closing stock is not shown at cost, but it's shown at cost plus profit, and therefore we need to eliminate that profit margin. Now the first thing that we need to do is, before trying to find out how much is that profit, we need to find out that percentage of profit. Like I said in the previous problem, it was given to us. They gave it to us that it is at 125% of cost. Okay, at 125%. But in this problem, they just said usual selling price. Now, when they do not give us the profit, we have a formula to find it. Okay, so what I'm going to say is, I'm going to prepare a working note here. Calculation of stock reserve. Calculation of stock reserve, or it's also called provision for unrealized profit. Okay, provision for unrealized profit. Now the first thing that I need to do is calculate something called as the rate, that percentage. Okay, that price, the rate. So I call it the rate of gross profit. Okay, the rate of gross profit. Now can you tell me whose rate of gross profit will we have to calculate? Will we have to calculate it of A or B? A here is transferring to B. We want to know at what price, what is the selling price that A is transferring to B. Okay, at what selling price this A is transferring to B. That is, what is the profit margin of A. So will we calculate it of A or will we calculate it of B? Can you tell me that? A is transferring to B at selling price. So will we calculate the profit margin of A or will we calculate the profit margin of B? Whose profit margin will we want to know? Very good, Audrey. It's going to be of A because A is transferring to B. So we want to know what is the profit margin of A, or what is that selling price at which A is transferring. Okay, so I hope that is clear. We have to calculate it of A. Why A? Because A is transferring to B. So we need to know at what price A is transferring. Now there is a formula here. The formula is rate of gross profit is equal to gross profit upon sales into 100. Gross profit upon sales up into 100. Gross profit upon sales into 100. Now these sales also include interdepartmental transfers. When we are talking about sales, we just do not take the sales, but also we take the including interdepartmental transfers. Okay, that means if you are talking about A, okay, A sales here shown as 6,25,000, but 25,000 has also been transferred to B. So when we are talking about sales, we just don't take 6,25,000, we take 6,25,000 plus 25,000. Okay, and what is the gross profit of A? Gross profit of A is 65,000. So replacing that in the formula, we are going to get equal to 65,000, which is the gross profit of A, into 100 divide by if you check the sales, it's going to be 6,25,000 plus 25,000. So it's going to be 6,50,000. 6,50,000. And how did I get that 6,50,000? It's 6,25,000 plus 25,000. Okay, and if you try to do this calculation, you will get the percentage will give you will get 33 point, sorry, you will get 10%. Sorry, if you do that calculation, you will get 10%. That means the selling price, the price actually what A is transferring to B is 100 plus 10. 10% is a percentage of profit. Okay, in the previous problem, the percentage of profit was 25%. In the previous problem, the percentage of profit was 25%. Here it is 10%. So rate of gross profit, this is the formula. So whenever the selling price, that percentage is not given to you, this is how you have to do it. Rate of gross profit of, you can in brackets, I'll just put it here, of transferring department. Rate of gross profit of transferring department. Okay, so this is what you get. This is the calculation. And now we can calculate our stock reserve. Now we can calculate our stock reserve. So stock reserve will be stock reserve is equal to, how much is the closing stock? Now they said in the previous problem they had given us two amounts, closing stock of one department and closing stock of the other department, and they said out of the closing stock of the second department only part of it has come from the former department, but here they've said the entire closing stock is from A. That means the entire amount is valued at more than the cost. So we have to calculate stock reserve on this entire amount, and that will be, stock reserve will be 3750 into 10%. 3750 into 10%. So you get basically 370. So the stock reserve is 375. And where is the stock reserve shown? It is shown here. To stock reserve. I told you it can be called different things. Either we call it to stock reserve or provision for unrealized profit on closing stock. So again, you don't have to write both. I'm just writing both so that you can write whichever you prefer. You don't have to write both. And the amount is 375. This is one adjustment. If you remember the theory which we had done, it has to be debited to the general profit and loss account, and it has to also be minus from closing stock in the balance sheet. Why am I minusing here? Minusing it from here because if I don't minus it from here, this closing stock won't be shown at cost. Because this amount 3750 has a profit element in it. Okay, so I need to minus it from here. If I don't minus it from here, it will be shown at a higher value than what is the actual value. So I'm going to say less stock reserve, which is 375. 375. So putting these two together, getting the final amount here will be 48,000 plus 3750 minus 375. You will get 51,375. 51,375. Okay, and now we can find out our final net profit. So here you have a total of 88,250. Here also it's 88,250. And then we finally have our overall net profit, to net profit. And the net profit is 63,375. 63,375. Okay. And since we have the balance sheet, this net profit needs to be added to the capital. So add net profit 63,375. So our total here comes to 1 lakh 1,63,375. 1,63,375. Now, if you check the balance sheet, I think the balance sheet will tally, which is 163,375. 163,375. That's the balance sheet total. Okay, so this is how the problem is done.